Ladies and gentlemen, good day, and welcome to the Tiger Logistics India Limited Q3 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. I now hand the conference over to Mr. Harpreet Singh Malhotra, Chief Managing Director of Tiger Logistics India Limited. Thank you, and over to you, sir.
Hello, good evening, everybody. This is Harpreet Singh Malhotra. I'm the Managing Director of Tiger Logistics. Thank you for joining this call. And, just to give you a little brief about what Tiger Logistics is, I'm sure, I must have met a few of you in previously, but, some people who've joined us new, so it's important for them to know what we are doing. So, Tiger Logistics India Limited is a BSE-listed leading international freight forwarding and a logistics company, where we are providing logistics solutions for the international business. When I mean international business, I mean in layman's language, anybody who has to export or import can avail our services. So, in short, we are providing door-to-door transportation and logistics services for the international cargo. So, just to give you an example, you're based out of Pune, and you have a buyer who gives you an export order from Germany, and he wants that the shipment. Full container, 20 feet container, to be loaded from Pune to reach his warehouse in Hamburg. So we undertake the complete logistics from Pune, where we engage a transport company, stuff the container in Pune, get it to the Nhava Sheva port, where we do the custom clearance, do the port formalities, liaison with the shipping lines, put it on the vessel. The vessel, once it reaches Hamburg, we take the delivery of the cargo, of the container, and deliver it to the warehouse of the buyer. So this total transaction is termed either as 3PL or 4PL, depending upon various products involved. And this is what, in layman's language, we are doing. Today, Tiger Logistics will complete has already completed 22 years, and this year would be our 23rd year in the month of June. I started this company in year 2000 with a very small staff of 8 people, and today we've grown to be a very big organization. Our strength lies in handling shipments especially for cargoes like engineering goods, automotive, yarns and textile, pharmaceutical, commodities like rice and wheat, FMCG products, and also I take pride in saying that we are one of the leading logistics company who handle the defense logistics, working for HAL or Banknote Press or various other defense organizations. Handling their sensitive projects into India and also from India to various countries. Over a period of time, Tiger Logistics has been able to have a very strong presence in the automotive market, where we handle major two-wheeler exports from India into various parts of the world. So we take pride in saying that today we work with all OEMs across India, whether it is Yamahas or Hondas or Suzuki or Bajaj or TVS, Royal Enfield, Hero MotoCorp. We work with all of them. We handle their logistics, which includes transportation, custom clearance, and freight forwarding and shipping of their final products. So this is what we are handling. Our total, out of India's two-wheeler business, we are close to 50% of India's two-wheeler business is handled by Tiger Logistics. So we have a very strong strong presence in the two-wheeler exports from India. Other than two-wheelers, we have a very strong presence in the engineering projects. When I say engineering projects, I mean transmission towers, sugar plants and machinery, various other kind of engineering projects which are being handled or supplied by Indian manufacturers or Indian exporters. These projects work under various models. Some are either funded by the Exim Bank of India, some are funded by World Bank of India, or some are self-funded by the Indian exporters here. So we have a fairly strong presence in that sector also. Other than that, we, over a period of time, we've developed very good business in the government sector. So, over a period of time, we've seen in last close to 7-8 years that the government has become very transparent as far as the procurement policy of the government is concerned. So that has enabled us to get a entry into a lot of government organizations, which includes, I would say, Hindustan Aeronautics, Bank Northwest, Chittaranjan Locomotive, BEML, Dell, just to name a few, So there are many of them for which we are working very closely. So that is the result of government's transparent policy in procuring goods and services from the private sector. So our presence in this sector is growing, and we feel that in coming months and years, this is going to be a major, contributor to our revenue. Other than that, we work in various other segments as well, where the India as such has a very strong dominance, which includes products like yarns and textiles, products like ceramic tiles, products like rice and wheat and sugar whenever it is open, So these sectors also we have a very strong presence. So what we've been able to do is that we've been able to create a very diverse portfolio as far as our product handling is concerned. So that we are not dependent on one sector, we are not dependent on one region, or we are not we don't become a seasonal logistics company. So that's the result is visible that across all quarters we've been lucky to get good numbers, and we've been lucky to get good business on board. Now, coming back as to how do we see in coming years, how do we see our future business happening? Now, I personally feel that as the Indian economy is growing, as what we see, what was happening in last 10 years, to be very honest, nobody really knew what logistics is. People, everybody knew about logistics, but then people didn't know. There was no focus from the government side. There was no focus from the higher ups in the government. But now what we are seeing is that the government itself is putting a lot of focus in reducing the logistics cost. Government wants that the logistics cost should be at par with the international level. So today our logistics cost is anywhere between 13 to 14% for any product, where the government is very determined to bring it down to a single digit. That's what the government is trying to do, and we are seeing that in action. That for the first time we have a national logistics policy, which was never the case earlier, So government at least is trying to put focus on this industry, put focus that, okay, this is the industry which is the backbone of any industry which the government either helps in growing, or a private sector works towards in growing that industry. So logistics become, if we have to compete globally, it is very important that the logistics cost is down. So I think we feel that this is an amazing step from the government side, that they put the logistics industry as such in focus in a big way by coming out with the logistics, national logistics policy, and of course various other steps which the government has taken in terms of dedicated freight corridors, in terms of running of double stack trains, in terms of having the dedicated rail freight corridors also, which is reducing the cost of logistics from hinterland to the ports. We were just to give you a small example, that we were in a conference with the rail operators, and the rail operators were so happy that because of the double stack train, they are able, the turnaround time of these trains has really increased. So, without naming the concerned company, they were very happy that, because of these double stack trains being run, especially from North India to Western India, the turnaround time of trains and the logistics cost of transportation from North India to Western India, which is the main gateway port for all Indian exports or imports, has drastically improved. And that's also showing in the in reducing the cost of transportation such goods. So we feel that times are good for us, and we are very hopeful that in coming times, with the government focus in reducing the logistics cost, they are providing. They are giving us the enablers, by giving us the national logistics policy, by giving us the dedicated freight corridors, and so many other steps which the government is taking. 24 hours custom clearance at the port, putting focus on faster custom clearance of imports and exports, which is which has been a big obstruction in the past years. But these small things is making a big difference, in overall supply chain. So I think we are in the time is right for companies like ours who've got a very strong presence, across India, who've got a pan-India presence, and who have who have presence in handling diverse products. So I think in times to come, this is going to be a very major step for us. Another important point which the government is making, very, very important point which the government is trying to do is digitalizing the whole processes. So, as a company, we've taken this issue very, very strongly. As a company, we are coming out with our own digital platform, which we look at launching it in maybe by Feb end or March or so, which is going to be a price discovery platform. So what we're trying to create is a MMT of logistics industry. Today, if you want to export a container or you want to import a container, you have to call a freight forwarding company or a logistics company to ask them the freight, to ask them how much will it cost them. So we are trying to digitalize all that processes. We are trying to remove the human, intervention in that, which will start as a price discovery platform, where and mostly focused on SMEs and MSMEs, because these are the organizations, these are the people who don't have access to good rates, who don't have access to good, good freight forwarding companies. So at the same time, they will get benefited, and as a company, we will have a deeper penetration into these markets where, our salespeople can't reach out, or if they reach out, there is some or the other hindrance in terms of, odd locations or so on and so forth. So I think digitalizing freight forwarding and logistics is going to be a big game changer, as well as we see our business is concerned. And we also see that overall we will be, more competitive in terms of bringing lower logistics costs to the SME players and lower logistics costs to the MSMEs, also. Coming now on the Q3 performance. I think overall, we are very happy with what we've achieved, because we see that there has been an increase in our volume. Overall, the export, in spite of the export freight rates dropping down, drastically what we were last year and this year, but we've seen that in spite of that, there has been a good increase in the number of the volumes which we see. The another very important aspect is that we've seen a good 32% increase in the air freight, because that is one of the future growth engines for our company. So we've seen that business has also increased for us, and overall 20% increase in the overall volume. So that has significantly helped us in improving the numbers, significantly helped us in improving our margins. Of course, there are certain other factors which helped us in our increasing our margins was that we were, as I mentioned, that we've handled some good government projects, so that also helped us in improving our margins. And we feel that this trend is going to continue as we move forward. Of course, I'm sure all of you must have had a look at our numbers, but we feel that in coming quarters, in coming months, the business is, we feel that we've added some new countries which were not there. We've been, we keep on adding new countries to our portfolio, so that has also helped us in improving the numbers, and we feel that it is in coming times this is going to continue, and we are very bullish about how things shape up. Though there is some kind of a sluggishness in the overall global purchasing. We are not. I don't buy the idea that there is a recession or something like that, but we feel that the buyers are holding their purchases for some time. Maybe in past few quarters there has been a major purchasing done by them, so the warehouses are full. So they are just trying to liquidate those stocks and then order more. So that is the experience. That is what we are seeing. So I'm very confident that in coming months or in coming quarters, business is going to grow pretty well. So in short, this is what it is, and I would like to conclude my short and brief talk with you guys. And if you have any questions and answers, the floor is open. Everybody is free to ask me anything. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Rishabh Shah from RS Investments. Please go ahead.
Hi, sir. Thank you for the opportunity. And I have a couple of questions. One of them is how do you see the freight rates moving ahead, and by when do you think the situation will normalize?
Mr. Shah, yeah?
Yeah.
Yeah. So, Mr. Shah, what has happened is that this drop, firstly, the increase, it is important that you understand that why did the freight rates increase why did they increase last year? So the major reason of the increase was that there was a big, supply which was happening from China to various parts of the world, and the freight rates really, there was a global imbalance of inventory of containers. So everybody was positioning their containers, all the shipping lines were positioning their containers at the Chinese ports, and that is what was, it created a major problem for Indian shipping lines where we did not have containers, and the freight rate also went up drastically because of shortage in containers. It is a demand supply thing, so the freight rates were very, very they went off very, very high. Now, if you see in last 6 months, what has happened is that Chinese exports has almost been negligible. and because of that reason, the exports, there is a big pool of empty inventory containers available. There is big space available on the vessels. The shipping lines are only sailing with 40% of their capacity. So there is that it's again a demand and supply game in play, and that's the reason the freight rates have come down drastically. So we feel, coming back to your question, this was a background. Coming back to your question, we feel that March onwards, business freight rates will go up. We are already seeing some signs, just some little signs of some shipping lines withdrawing the lower rates which they had given us for February. So they are, contributing that to some, vessels going into dry docking and all that. But we are, from our sources, with our agents, what we found out is that China is starting off now. So we are waiting for the Chinese New Year to end, and we'll get more clarity. But on a bigger picture, we feel that March onwards the freights will start going up.
Okay, noted. Thanks. And I have other question is that you had mentioned in your press release and opening remarks that during this quarter you handled government projects. So want to understand this in detail as to how is the receivable days and what kind of order were given, and was there any qualification that they did before the order was placed? Any idea on that part?
Yeah. So all government tenders have a technical round and a price bid round. So till the time you are technically qualified, you cannot. They will not open your price bid. So as far as the defense business is concerned, Tiger Logistics is exempted, from the technical because of our performance and various sensitive projects we've handled. So we are exempted for the technical round. So we can, our bids are never checked for the technical side. So yes, you can say that there is an entry barrier which we have crossed very well, and our tenders are looked at as reliable company tenders, and of course they are taken directly for the price bid. Also, to give you a background, that we don't have to give any earnest money as far as the defense projects are concerned, which are for Indian Army, Indian Air Force, Indian Navy. So we are exempted from them because, again, of the same background that we've handled some very sensitive projects for them. Now, coming back to what projects we've handled. So these are projects for BEML, they are projects for various projects which are there, where, which we keep on handling. So majorly for BEML, Dell, HAL, and, various other companies, BNPL. So these are the projects which have contributed to good numbers.
Right. Thank you for the detailed explanation. And lastly, I just wanted to get an idea on what are the growth prospects and how should one look at for the future growth in Tiger Logistics.
So on a macro level, you know that logistics is the buzzword these days. Everybody is talking of logistics and bringing down costs and focus and everything is there. But at a micro level and a very specific term as far as Tiger Logistics is concerned, I feel that we will continue to grow in the auto sector, which we feel is something which has been good for us, and we feel that there is lots to be done in that sector. So the future growth engines, of course, would be auto sector, which will include both two-wheelers and four-wheelers. At the moment, we don't have much exposure in the four-wheeler market, so we want to strengthen that position in the four-wheeler market. Also, we don't have much presence in the auto parts, specialized auto parts market. We don't have much presence. We work directly with the OEMs. So that is also one space which is very much available for us to get into. The future other growth engines, of course, would be imports. At the moment, 95% of our business comes from export logistics. So what we are trying to do is that we are also majorly working towards developing our import side of the business, which is again which will give us good growth. And then, of course, thirdly, the digital platform which we are launching. So these three, four, five things which we intend, which we've been not talking of now, but for last few years. So we are not trying to reinvent the wheel, but yes, working on our strengths and working on our captive business which is there.
Okay. Thank you for the detailed explanation. Thank you. That's all from my end.
Okay, Mr. Shah. Thank you.
Thank you.
Thank you. Before we take our next question, we'd like to remind participants to ask a question. You may enter star and 1. We'll take our next question from the line of Rahul Chandani from Sunidhi Securities. Please go ahead.
Yeah, hello. I have a set of questions. I'm looking at this company for the first time, so there might be certain questions which might be answered in the past phone call. So am I audible?
Yes, Rahul. Yes,
Yeah. So you told us that you provide end-to-end solutions for the logistics, majorly into the export volumes. So can you share me what is the share of your logistics into the export and the local, if you can provide me that?
Yeah. So Rahul, we are only into international. We don't do any domestic logistics.
Okay.
So yeah. So that answer your questions. That 100% of our business is international. So my clients would either be exporter or importer. So if you ask me, "Kya Harpreet, Delhi se Chandigarh, you send me a vehicle," I am not into that business. So so we are 100% into international logistics only. Hello.
Sir,
Hello?
it looks like Rahul's line has just got disconnected.
Okay.
We'll maybe wait for him to rejoin. In the meanwhile, we'll move to our next question.
Yeah.
We'll take our next question. That's from the line of Jinesh Kothari from HDFC Securities. Please go ahead.
Hi, Dinesh. How are you?
Good, sir. I just had a couple of questions to ask. As I was looking at our numbers that we have released, so the margins, on the margins front, we have significantly improved our margins on quarter-on-quarter and year-on-year basis as well. So I wanted to explanation about that. What has impacted us so well that we have improved our margins so well in the given quarter?
Yeah. So, Jinesh, just to give you a brief, that in last few quarters, we have been improving our margins. And if you see from last 4, 5, 6 quarters, our margins have been improving each quarter. So, some of the steps which we took pre-COVID levels, that one thing we decided was that we want to be debt-free. So, the interest cost definitely was is almost negligible at this point of time. Secondly, we were pretty top heavy, because we were very thinly spread, and that what happens is that when you're chasing the growth, you have to take certain steps in terms of penetrating into the market and getting the business on board. But we realized pre-COVID times we took some hard steps which helped us improving our numbers. These steps were, of course, giving zero credit where the margins were very low, which helped us in two ways. That, of course, we could reduce our interest costs, and we could also get good business on board. And of course, when I said that when we were very thinly spread, we were top heavy. So we had to reduce our HR costs, which definitely helped us there, and that is what impacted our businesses also. So last 6-7 quarters, the numbers have been improving, and it's a result of our consistent policy on the same factors, and that's showing results. And of course, in this quarter, certain government projects and certain new markets, because if you see, there has been a volume growth as well as in the air freight and also in the sea freight. So that has helped us. So which was a big boost for us. In totality. So that helps us in improving our margins.
Right, sir. Noted that. But I just wanted to understand a bit detailed that in our presentation, we have mentioned that 80% of our revenues comes from the top five customers that we are having. From Q2 and Q3, almost 77% and 80% we have mentioned that we are gaining from the top five customers. So what else that has impacted that in our customers? The one thing that I got understood from that is the freight charges that are reduced, so that has impacted our revenue, decreasing our revenues. But the mix that we are handling, so I did not get that from which segment that we are gained our margins, because 84% of our cargoes was automobile in Q2 as well, and 86% in Q3 it's also from the automobile segment.
Yeah.
So and on the margin front, in Q2 we were having a margin of almost 5.25 EBITDA margin percentage, and in this quarter we have gained EBITDA margin is around 10.6%. So I cannot make up what has really improved in that segment.
Yeah. So, a very good question. So, I'll just give you a very detailed answer in that. So, you rightly said that my top five customers, they constitute 86%, almost around that percentage of 80% of my total business. So, where has the new business come from? That is your question, correct?
No, sir. My question was that 80% of our revenue is getting generated from the top five customers. And on the volume front, out of total volume we have handled, 86% of the volume we have handled is from the automobile segment.
Correct.
So in this quarter, we have ended up margin of around 10.6, EBITDA margin I'm talking about, is around 10.6%. And if I see the Q2 margin, it is around 5.45%. So, and in Q2 also, we have handled the same cargo in the same proportion as we handled in this quarter.
Yeah.
So, what was the key trigger that ended up yielding our better margins?
Yeah. So what has happened is that 2-3 things which have happened is that in last 2 quarters has been that we have added new markets. When you see the margin growth, which is volume growth, which is there, we've added few markets, new markets, suppose for the same client. Like, I'll just give you an example for Yamaha. So in Yamaha, we've added 3-4 markets which we were not handling earlier. Which were not there earlier. So overall, that has contributed in improving our numbers, firstly, and also improving the overall margins, the profitability of the company. Another important aspect is the air freight increase. The increase in the air freight volumes, which has also contributed in increasing our overall profitability, because air freight is always more profitable. So that has also increased by close to 32%, which was not there earlier. Now air freight is also of the same company. So what we are seeing is that this is all captive business. Suppose if I go to Yamaha, for Yamaha earlier I was handling maybe just 2 markets, but now I'm handling maybe there are 6, 7, 8 markets, the normal markets. Along with that, I am also now handling their air freight business. So that means though my dependence remains on them, but my overall profitability, overall volume has grown. So surely you may say that your dependence on, you have not added any new clients. 100% I have not added my new clients, but because of my performance, because of my consistent, good service, they have agreed to give me new products to handle, which I have been able to do it successfully. Same goes with the new markets. If I'm handling 2 or 3 markets for them, which they have been very happy with my services, they've given me 2, 3 more markets to handle, which has helped me in increasing my volumes. Of course, them has also increased. But this increase in the volume has helped me improve my numbers.
Right. Got noted that point, sir. Thank you so much. I'll join back in with you.
Thank you. We'll take a next question from the line of Rahul Chandarana from Sunidhi Securities. Please go ahead.
Yeah, hello. Yeah, actually.
Yeah, Rahul, yeah. We missed you, like we lost you there, no?
Yeah. So I have 2 questions. First of all, I see your volume mix, right? From in your presentation you have provided from FY18 to FY22. So you have decreased your volumes by half from the peak of FY20 or 19, but still the margins, the EBITDA margins are the same of 7%, and the revenue has just grown. So can you explain me what is this? What's the reason? Like, if you have taken a price hike, then your margin should have increased. But can you give me a detailed explanation on this one, if possible?
So I think you were not there on the call earlier. So what had happened was that earlier we were chasing growth by working on very thin margins. This is, I'm talking pre-COVID levels. We are working with very thin margins. We were working at lower margins but bigger volumes, which and in the markets where the receivable days were more, and the business, we wanted to get into those businesses, markets like ceramic tiles, markets like in Nashik, fruits and vegetables, grapes, and so on and so forth, where the product value is very small and the freight amounts involved are small, but there is volume involved and the margins are also very small. So during like in the start of 2020, before COVID, we decided that we have to shun these markets for some time. We started saying no to those businesses. We started focusing on our core sector of auto and engineering goods, where which were already contributing close to 50-60% of our total business, where we felt that our money is safe, our businesses are safe, the business is consistent, and we can build on that, So these were the safe businesses where we were working with corporate customers, where we were working with big multinationals. So which was a conscious decision by the organization to take a call on that. So that worked in our favor, and that helped us that even with the lower volumes, we were able to get, because of course, the increase in freight rates also helped us in improving our turnover. The overall top line definitely helped us because it's a costless model, so that definitely helped us in improving our overall business also. So that is also a factor that, why we, what was the reason of reducing our volume, and why even with the reduced volume we were able to do much bigger turnovers, at lower volumes. So I hope that answers your question.
Okay, and one more question. The agents are in outside countries other than India, so are they on your own payroll or are they on incentive?
No, they are our partners there. They are more on, sometimes they are on incentive or on handling fee. Normally they are on handling fee, so we give them per container handling fee. So, and these are very exclusive agents which we've been working over a period of time, and, we work very closely with them. So they are not, on our payrolls. They are separate companies, everything separate, separate entity, but they act as our handling agents, and we give them handling per containers or per document.
Okay, so it's on the percentage of the volumes they do.
Correct.
And can you share that number if possible, or what percentage it would be?
It depends, to some we have to give, if the volume is very high, we give them $35 per container. Sometimes the volume are low, we give them $50. Sometimes, the demand, the work involved is more, so we have to increase that to maybe $100. It depends upon the kind of work they are handling for us, But it varies between $35 to $50 per container.
Okay, and I have just one last question. So you have mentioned in your PPT that you follow asset-light model. So do you have contracts with all the trucks and the shipping agencies, and also the logistics partner outside India? So do you have a contract, or do you take on need basis, or what's the scenario?
Yeah. So what happens, Rahul, is that we have a yearly contract with all of them, that we will be working with you. In that contract, the terms of business are clearly mentioned. The credit terms and availability of vehicles and all those things are mentioned. But on a day-to-day basis, our operation team knows that they have to work with these 3-4 suppliers. So whoever is cheaper, we put them against each other. Whoever is cheaper, we avail the services of that. But what has happened is that we shortlisted, suppose we have, shortlisted 5 transporters, that okay, हमने इनसे काम करना है. We have to work with these 5. The rates are the same, everything is the same. But sometimes spot rates we are able to get, so we work with them. But the terms and all those things are finalized beforehand only. And the same thing goes with the shipping lines. Nowadays, shipping lines, we don't go for a long-term contract. We go on a monthly contract because there is a lot of fluctuation in the rates. So that's how we do. Like, we know that we've been working with these people, so we work with them. But the broader terms of the agreement are clearly defined beforehand only.
Okay, so you don't face any.
Yeah.
Yeah. So you don't face any delays due to these things, right? You keep handy clients into your hands so that if one is not okay, you shift on to the another. But it would affect the margin at that point of time.
No. It is, in fact, it is better because we have a choice of 2-3 vendors, So अगर एक नहीं दे पाता तो दूसरे से ले लेते हैं, दूसरा नहीं दे पाता तो ऐसे करते हैं.
Okay, and are you getting to reach the peak levels of FY20 or what will be the segments? And I know one of the participants had asked for top 5 customers being 80%. So any change going forward, will it reduce, or if you can give a broader sense, because that's a very risky thing for a business to have your top 5 clients doing 80% of your volume.
See, we are adding few more. Auto will always remain a dominant sector for us. I'll be very honest. Even if I don't see, we may add 1 or 2 more in that kitty, but I don't see that that auto coming down by, like, it will never be less than 70% of our total business, because we feel that we are investing more in that segment, in that sector. So we may add, today we've got 7-8 OEMs with whom we work in 2-wheelers. So we may add some of them on the 4-wheeler side. So that will continue to grow, but it will never be less than 70%, because that's what we are planning, what we are working towards. So that will be there. And there is a very thought, it is not that by chance it has happened. We work towards it. We have hired people from the auto sector to lead this vertical. We have, we've got some very senior people from the auto sector who are heading this. So there is the thought behind this is that this is going to be a growing sector for India. Like you have pharma, you have chemicals. Auto is one sector which is going to be a big sector here. Another important is because in auto you can always have big volumes. बिकॉज बाइक जानी है तो वो एक कंटेनर में 50 बाइक जाएंगी. अगर वो महीने की 500 गाड़ियां लेता है तो आपके 10 कंटेनर तो वैसे ही हो गए, और 500 से कम कोई गाड़ी लेगा ही नहीं किसी मार्केट में.
And the volumes are also ongoing.
And it is a consistent volume. It is not seasonable. फैक्ट्री तो एक्सपोर्ट नाउ पीपल डोमेस्टिक अगर डिक्लाइन होता है तो एक्सपोर्ट के ऊपर ही फोकस करते हैं. So it's a very thought over business idea. And, I think we will, as I mentioned earlier, it will never be less than 70%. So we will continue to, grow in that segment, because उसी में अपने को करने को बहुत है. अभी हम एयर का नहीं कर रहे हैं, उनका imports नहीं कर रहे हैं. So all this will grow, because if you're handling exports, you can always do imports and, increase your volume share with them. And we will continue to do that.
Okay, and do you have any competitors in this segment?
Yeah, so we compete with multinationals. Basically, we compete with Kuehne+Nagels, we compete with DHL, we compete with DSV. These are some of the multinational companies who are our competitors in the auto sector. But in the other sectors, there are only Indian companies.
Okay, I'll what I'll do is I'll connect with the IR and I have certain more questions. So I'll reach back to you later whenever you are free.
No problem. No problem.
Yeah, yeah. Thank you very much.
Thank you.
Thank you. Our next question is from the line of Manas Singh from Value Growth Advisors. Please go ahead.
Hi, sir. You have mentioned about the acquisition of LCL player. So is there any timeline for the same?
मैं तो कहता हूँ आप कल बता दो हम कल एक्वायर कर लें लेकिन कोई मिल ही नहीं रही किसी So the whole idea is we are on a lookout for last 6-8 months now, and we don't want a company where I don't want to bail them out. I want somebody who wants to grow with us. So it's difficult to find. So now we have we are also looking at companies outside India. So that's what we are looking at. So the search is on.
Okay. And sir, what is the capex need for the next year, and how we are going to meet this?
So capex as such, there is no need for capex because we intend to remain asset light. We have enough working capital. We have enough reserves to take care of our working capital requirements. So we are not looking at any major capex in coming 2 years at least.
Okay. And last one, you have mentioned something about green logistics in your PPT. So can you just explain what is it?
Yeah. So the whole concept about green logistics is that how we can improve the carbon footprint. So the whole idea is to bring this subject which nobody is talking about in the logistics sector. So we are looking at when we are talking to these multinational companies like Yamahas and Suzuki's and Honda, so they always talk about what are you doing on the environment side, save the how are you planning to reduce the carbon footprint. So we are very keen that if we can have some e-vehicles transportation, like where we can use trailers who are electric vehicles. So at the moment we are not seeing anybody coming forward who got EV trailers. So that is what we want to promote, and this is promotion which is by even our customers are very willing that do that. So the concept is of green logistics is this, that we bring this concept back into the focus of the organizations, so that we start talking about these things.
Okay, sir. Thank you, sir.
Thank you. Our next question is from the line of Jinesh Kothari from HDFC Securities. Please go ahead.
Hello. Yes, sir. Just a follow-up question to the previous question that I've asked. So as you mentioned that the margins were improved by air freight and you are adding some more geographies to it. So as can you please give the breakup in last quarter, what was the air freight revenue that we generated and what is the percentage of the air freight revenue in this current quarter that we have generated?
I don't have the numbers exactly with me, but I can definitely ask my, if you can send a mail to our IR, we can definitely give you a detailed report as to what was the air freight last quarter, and what are the new businesses we've done in the air freight in this quarter, which will give you an idea as to how this increase has happened and how it will continue in the coming quarters.
Right, sir. I'll contact the IR and we'll get in touch with. Yeah.
Thank you. That was the last question. Ladies and gentlemen, that brings us to the end of today's call. On behalf of Tiger Logistics, we thank you for your participation. You may now disconnect your lines.